Hello friends, welcome to the BFM series for June 2026. In BFM series, we are covering all the numericals, objective questions, case studies, theory, everything related to BFM, all the topics are covered. We will gain a lot from this. In fact, the series is not only for BFM, it is for all the subjects. You'll see, it is related to ABM also, ABFM also, BRBL also, everything. So watch it completely. Like the video, subscribe to the channel, click on the bell icon. Today we will be dealing with LRS, Liberalised Remittance Scheme. LRS is an important topic, always remember, in BFM. The new scheme, not new, it's long back now. The scheme which has been brought in covers everything, all the types of remittances which are being sent abroad, other than import-export. So watch it completely, like the video, subscribe to the channel, click on the bell icon. Let's start. Which of the following statements are incorrect in respect of resident individuals investing under LRS scheme? So which of them are incorrect? Pay attention, which of them are incorrect? Focus on the question. Incorrect you want. Okay, incorrect. Which of them are incorrect? Incorrect you want. So, resident individuals investing under LRS, Liberalised Remittance Scheme. So, what are the options? Resident individuals are allowed to invest in IFSC in GIFT City. Under LRS, are you allowed to invest in IFSC? Second, B. Resident individuals are allowed to open foreign currency accounts in IFSC to undertake investment in GIFT City. So, under LRS means if you want to open a foreign currency account, are you allowed in IFSC? Funds lying idle in the foreign currency accounts for more than 15 days are to be repatriated to the bank accounts in India. So, if any foreign currency funds are lying outside, okay, for more than 15 days, those are to be repatriated back. Investments can be in securities issued by corporate residents in India. So, which of them is incorrect under this LRS scheme? See, the incorrect one is very simple. Resident individuals are allowed to invest in IFSC. So, that's right. LRS means permission of LRS is given under IFSC also. Means if I send the money to IFSC, GIFT City, that is also considered as foreign land only. Okay. So this is true. But I want incorrect. Resident individuals are allowed to open foreign currency accounts in IFSC. Allowed. Not a problem. Funds lying idle in foreign currency accounts for more than 15 days are to be repatriated. This is false. Not at all true. Okay? 15 days, nothing. Okay? Investments can be in securities issued by corporates. So that is true. So the answer is this, C. Okay? Individuals are permitted to remit overseas freely without the approval of RBI, subject to a limit of dash USD in a year. What is this? 2,50,000, 2 lakh, 5 lakh and 1 lakh. So what is the answer? How much under LRS are you allowed to remit? How much under LRS are you allowed to remit? Yes. How much? The amount is 2,50,000. Okay, under 2,50,000 you can remit outside per person per financial year. Per person per financial year. It includes minors also. It includes minors. Kindly note, very important part, includes minor. Means if I am having some minor in my family, even that minor, in that minor's name, if that minor is having the income source, means he might be having some property from the earlier generations. So if that minor is having the income source, that person can send the money outside. Okay, 2,50,000. If income tax deducted from depositors is not remitted within the stipulated time, it constitutes. Now, what do you mean by this? See, income tax debited. Income tax is to be given to whom? Suppose if I debit some income tax. Okay, TCS we call it, tax collected at source. Okay, and in INR transactions we have TDS, tax deducted at source. In foreign transactions we have TCS, tax collected at source. Both mean one and the same only. So now means income tax, from income tax angle, it's after all the income of income tax. It's not the same. Somebody might immediately argue, sir, they are different. I know they are different. From income tax angle, if income tax deducted from the depositors is not remitted, it will lead to what? Which risk? Internal control risk, reputation risk, earnings risk, compliance risk, or credit risk. So, what is it? What type of risk is it? It is? Yes, which type of risk is this? It is compliance risk. Okay? It is known as compliance risk. Kindly understand this. This is a compliance risk. Okay? Next one. Which of the following transactions is permitted under the Liberalised Remittance Scheme to all resident individuals to freely remit USD 2,50,000 per financial year? So, which of the transactions is permitted? Okay. Number A, a permissible current or capital account transaction or combination of both. Is it so? Current account or capital account. What is the difference between current and capital? Current account means for daily use, daily expenses, working capital expenses. Capital means long term. I purchase something, machinery, big machinery. So A is that. B is acquire or hold immovable property or any other asset outside India. Can I purchase a house outside India? You have to answer that. C, investment in overseas companies listed on a recognized stock exchange abroad. Can I do that? Can I invest in some overseas companies? And D is all of the above. Now you think, everyone, what can be the answer over here? Is it A, capital current, B, property, C, shares, D, all of the above? What do you think is the answer? Yes? Kindly note, LRS is for all of them. All of the above. It is for all of them. Okay? All of the above. Got it? All of the above. See, actually these two, B and C, are included in A. See, this is the part of A only and this is the part of A only. How? See this. Immovable property I am acquiring. Immovable means what? I am acquiring a long-term asset. So it's a capital account transaction. I am purchasing a shares of a company. So again it's a long-term asset. It's a capital account. So B and C are actually the part of A only. That's why it's all of the above. Okay? If you check the definition of capital account transactions, you will find both these. Okay? Next. Which of the following statements about LRS is or are correct? You can choose more than one. Which of the following statements is or are correct? You can choose more than one. Under the scheme, all resident individuals, including minors, see, I told you just now, including minors, are allowed to freely remit up to USD 2,50,000 per financial year, April to March. Okay? True? What do you say? Type in the comment section. True or false? True. A maximum 18 remittances per financial year is permitted. What is this 18? Forget any 18. If your amount is 2,50,000, you can do 1 lakh remittances. No worries. If you have legal proofs, when you do such huge transactions, you should have legal proofs. Okay? So this is false. It is optional for the resident individual to provide his or her permanent account number for all transactions under LRS made through authorized person. Means it's optional. I may have PAN number, I may not have the PAN number. Now this you have to think. A remittance for trading in foreign exchange abroad is prohibited under LRS. So now you tell me between third and fourth. See, I have given first option is right. Second is wrong. What about third and fourth? What do you say about third and fourth? Can I say that I don't have a PAN number? If I don't have a PAN number, how am I doing this foreign transactions then? Isn't it? Simple logic. This is false. This is true. Remittance for trading in foreign exchange abroad is prohibited under LRS. Okay? So true. 1 and 4th. So the correct answer is 1 and 4th. Got it? In terms of provision of section 5 of FEMA, any person may sell or draw foreign exchange to or from an authorized dealer if such sale or withdrawal is a current account transaction. Drawal of exchange for transactions is prohibited with a person resident in which of the following countries? This is a bit tricky question. Which person, simple question over here is which person living in which country, means drawal of exchange for transactions is prohibited. Suppose if I want to do the transactions for some person living in X country, that X you have to find out. For which country it is not allowed. So LRS is not allowed in which country? Very simple. Myanmar, China, Nepal, Bangladesh. Think, everyone think. Which country is a part considered as almost a part of India only? Bharat. It is Nepal. Kindly note, 2 countries are not allowed. One is Bhutan. And second is Nepal. These 2. LRS not allowed. Okay? LRS not allowed. An Indian citizen going abroad on a private visit to Nepal and Bhutan is eligible for foreign exchange A up to USD 5,000 in any calendar year, up to USD 5,000 in same in any calendar year. I think so, same up to USD 5,000 in any calendar year. So let it be. Chalo. So option, is it true or false? True or false? True or false? Let me ask you this question. A person going abroad on a private visit to Nepal, pay attention, Nepal, is eligible for USD 5,000 in any calendar year. Is it true or false? You give that much answer. True or false? Nepal is false. Answer is false. Okay? Nepal, Bhutan, they are almost considered our country only, Bharat. Because the currency over there is also Indian rupees. They accept all Indian rupees. Okay? Nepal has Nepalese currency, but that is only for namesake. Everything is traded in rupees only. Now, case studies. Look at these case studies. Mr. Vijay wants to fund his son's USD 4 lakh education in USA from his own funds. Can he remit the funds without RBI approval? See, pay attention. Very important case over here. Mr. Vijay wants to fund his son's studies abroad for 4 lakh USD in one financial year. Can he do it without RBI approval? See, with RBI approval you can do it. Everyone knows that. So without RBI approval, can I do it? Because what does LRS say? LRS says 2,50,000. Maximum which I can send is 2,50,000. So this is more than that. Then what to do? Should I take RBI approval or no? Can your bank itself allow it without RBI approval? What do you think? Can your bank itself allow it without RBI approval? The answer is, what is the answer? Can your bank allow it? The answer is yes. Without RBI approval, you can allow it. Subject to. Now I'll give you the proper explanation. The answer is yes. How many of you typed yes? Because many of them feel that 2,50,000 above, not allowed. It's not that. Education and healthcare, health, operation, anything, healthcare. Okay, allowed. Without RBI approval. Without RBI approval. Okay, say this. This is permissible transaction. Mr. Vijay can remit the funds under LRS using the relevant purpose code, whatever this code is. Nobody is going to ask you this. The amount within the annual limit of 2,50,000, no special RBI approval is required. So within 2,50,000, no RBI approval. But this amount is more. Look below. If the total expense of the education or medical treatment exceeds 2,50,000, the individual can still remit the full amount based on an estimate from the foreign institution hospital without prior approval, RBI approval for excess amount. So no RBI approval is required in this case, right? Because education and medical expenses freely allowed, but subject to documentation, estimate. Proper estimate should be there. Okay. The ED, now next case study. The ED, Enforcement Directorate, has investigated the high net worth individual Vijay Deshmukh for creating offshore trusts or entities and funneling funds exceeding the LRS ceiling. LRS ceiling means 2,50,000. Exceeding the LRS ceiling, okay, often under the guise of gifts and maintenance to the non-resident family members. My God, see, people are doing so many tricks to remit the funds. So, what did this Mr. Vijay Deshmukh do? He created offshore trusts, new trusts were created in foreign countries, and then funds were transferred to them. Under what note? That they are being transferred for the family members, upkeeping of the family members, gift to the family members. Is this allowed? Firstly, see, the question over here is this allowed? Is ED right? What is ED? Enforcement Directorate. This is basically the police of FEMA. Very simple. This is basically the police of FEMA. Who is the police of? If you go outside FEMA, if you breach the acts of FEMA, immediately the one who will catch you is ED, Enforcement Directorate. Okay? So what is this? Is this correct? What is ED correct over here? So the answer is yes. Such breaches are considered violations of FEMA and can lead to significant penalties, including, now this question comes in exam, fines up to 3 times the amount involved in the contravention and potential legal action. So legal action, see, not only fine, legal action will also be there. It can be jail also. Legal action means it can be jail also. Of course, it's not hanging, only jail. It can be. Ignorance of law is not acceptable defense. Means somebody might say, I didn't know this. Not allowed. I didn't know this is not allowed. Ignorance of law is not an excuse. And RBI takes strict approach to ensure compliance with the scheme's provisions. Okay, so ED is correct in this. It can fine up to 3 times the transaction amount and also lead for some legal action. Okay, if some money laundering is involved, A student remits funds for education but has unspent money in the foreign account after becoming the non-resident by moving abroad for studies. So there is a student who has gone abroad for studies. Now he has sent the money for education purpose, but some money is still lying there in the account. What should that person do? Just now we saw one case, 15 days, which was wrong. I gave it wrong now. So if that is wrong, what is the right answer? Here. A student remits funds for some college abroad, but the funds are lying. Okay? Idle over there. What should the student do? And in how many months should he refund it back? The condition for repatriation, read this properly. The condition for repatriation, bringing back the funds to India, unused foreign exchange within 180 days, does not apply once the individual status changes to NRI. What does it mean? The student is not required to send the money back. Why? Because he has become an NRI now. So the student is not required to send the money back. The 180-day limit is relevant to resident individuals who retain unutilized funds abroad. If I am a person resident in India, Bharat, I am the resident of Bharat, and then I am sending the funds abroad, then I'll have to bring it back. Okay? But if some NRI is taking the funds abroad, then the NRI is not required to bring it back. So important terms are here. So many important terms are here. Okay? Don't miss these important terms. Very, very, very important terms. Got it? Numerical on crystallization of overdue export bill. Crystallization of overdue export bill. Crystallization means converting the foreign liability to INR liability. Let me clarify that point first. What is crystallization? In crystallization, what do? We convert the forex liability into INR liability. Why do we convert it? Because that bill is overdue. What does RBI say? Pay attention. RBI says that whenever you have a forex liability, forex loan, and it becomes NPA, you can call it NPA, it becomes overdue. So in that case, convert this forex to INR, rupee liability. And this process is called as crystallization. Okay, this process is called as crystallization. This is always done for the NPA loans, NPA forex loans. Okay, NPA forex loans. That's known as converting the forex liability to INR. Okay. Now, what is this numerical? See, an exporter had an export bill of USD 10,000. Discounted by the bank. So discounted by the bank means what? Bank had given the finance. This was financed. This was financed by the bank. Okay. So export bill of USD 10,000. Export means he had done some export few years back. Okay. A few months back, not years back. Few days back you can call it. It's given. Everything is given over here. Few days back he had done some export. And now this export was due for payment. It was due for payment. It was to be paid. But look at it. He had done an export. He had taken the finance from the bank. And now what? The due date for realization has passed. Now the payment was to be received, but it has not come. Okay, means the payment from the buyer has not come now. This should have been received by the bank, because what will bank do? Bank has given you the finance, customer, and now it has to get the money from the buyer in dollar on the due date, but it has not got it. And the bill is now overdue. So this is overdue now. Okay, the bill is overdue now. Now what is given? INR interest rate is given as 7.5%. INR interest rate is 7.5%. Penal interest rate is 9.5%. This is the rate of interest. For rupee loan is 7.5, and for this penal interest it is 9.5%. Now what are the details? Due date of that bill was 15th July. Okay, due date of the bill was 15th July. So on 15th July the buyer was to pay. 15th July the buyer was to pay. Okay. Date of crystallization is 5th August. So on 15th July the buyer was to pay. It has not paid. Buyer has not paid. So bank has to convert it to the rupee liability. So bank has converted it on 5th of August. Original bill buying rate is USD 1 USD equals to INR 80 on 1st July. So original bill buying rate on 1st July. It means, what do you mean by this 1st July date? Original bill buying rate on 1st July means the bill was financed on 1st July. At that time bank had bought. So bank had financed on 1st July. TT selling rate on 5th August. See, 5th August is which date? Crystallization. 5th August is INR equal USD 1 USD equals to INR 82. Okay. So the exporter will be liable to pay what amount? What is the amount the exporter should pay to the bank? Problem is not simple. First, have you understood the crystallization? Type yes in the comment section. If you have understood the concept of crystallization, forex liability to INR liability. Now I'll go further. How to convert this? What is the rate to be taken? Whenever you are converting any forex liability to INR liability, the rate to be taken is number 1, higher of, see this, higher of original bill buying rate. So original buying rate, B I'll write it, bill buying rate. Okay, or should I write it full? I'll write it full only here because it gets confused, these short forms. Bill buy and original bill buy on which date? 1st July, when it was purchased. So original bill buy or second is TT rate, TT selling date means on the crystallization date. TT selling on crystallization date, crystal date. So higher of these two, you have to take higher of these two. Okay, you have to take the higher of these two. Pay attention, very, very, very important terms. Okay, crystallization is always to be done when the liability, the payment is not made on the due date. At that time the crystallization is to be done. There are rules for this. Okay, there are rules for this. RBI has given certain conditions. Those we'll discuss someday later. The crystallization rules for import bills are separate. Crystallization bills for export bill are separate. Crystallization rules for usance bill are separate. Crystallization rules for side bills are separate as per RBI. Those I'll discuss someday later in a single video because that requires a separate video. That is not, it can't be covered in any other videos. Okay, I'll do it separately, that session. Let's try tomorrow only. If tomorrow I can, means next any days. Okay, so next, so higher of original bill buying or TT selling, whichever is higher. Okay, now check this, which is higher, 80 and 82. So this is higher. So I'll be using the rate of 82 over here. Higher of original bill buying or TT selling. So I'll be using the rate of 82 over here. So now what is to be done but? What is the rate? What are the days? Rate is done. What about the days? See, the bill was purchased on 1st July. 01 July. The bill was purchased, means bank had financed. When was the due date? 15th, I think so. 15th July. Due date. Due. Okay. So this was finance. Finance was done on 1st July. 15th July was the due date, isn't it? 15th July. Where is it? Yeah, due date was 15th July. Crystallization is 5th of August, means payment is not received on 15th July. So here payment was to be received, but no, not received, payment not received. So now it is extending. And on 5th August, ultimately bank said that nothing doing, now convert this. So here crystallization is done, crystallization. So I have converted the entire liability to INR. I have converted the entire liability to INR. So now, what will I apply and what will the exporter pay me? See, what was the amount of the bill? 10,000. $10,000. Rate I have fixed now. Rate is 82. So I have to convert it at the rate of 82 now. Okay, forget all the rates now. 82. Now interest up to due date. Up to due date. You should always charge the normal rate of interest. What is the INR rate of interest that you should charge? Okay. So what will you charge? Normal rate of interest, INR. What is the INR rate of interest? 7.5%. So you will be charging here 7.5%. 7.5%. And for this remaining part you will be charging 9.5%. Penal, isn't it? For this part you will be charging 9.5 penal. Got it? Clear? This should be very clear in your concept, in your mind. Where do you charge regular? Where do you charge penal? Now calculate the number of days. Calculate the number of days. 1st July to 15th July. Okay, 15th July end. Due date, full date. So what is the number of days? 15 to 1st. So it is 15 days. 15 days. And here 5th August to 15th means 15 July to 5th August. So it is 25 and 5. July is of which, how many days? January, February, March, April, May, June, July. 31 days. So 31 days. So this will be 21 days, not 20 days. 31 days, 21 days. Why? Because July is of 31 days. Okay. So 21 days over here and 15 days over here. So what should that customer pay me now? That customer should pay me, see this, the exporter. Exporter will pay what? Exporter pays, what does he pay? First, principal. Principal is main, right? Principal plus normal interest. Interest plus penal interest. Right? These three things the customer will pay me, and if there are any charges, extra penal, any charges which I am charging, charges. But here no charges are given. In this numerical, if you see, there is no charge mentioned. Otherwise, they mentioned it in the numerical. Kindly charge this, as this fee, that fee, any fee. So charges. But here there are no charges. So this will be 0. Okay. Now calculate these three. Principal. What is the principal amount? P equals to, what is the amount? $10,000 into rate we have fixed just now, 82. So 82,000 rupees. 82,000 the customer will be paying me. 82,000, this is my principal amount. The customer will be paying me 82,000 as a principal amount. Now regular interest. Interest equals to normal interest. NI, I'll write it. Normal interest. 82,000, see this principal what he has to pay. Because after all I have financed him 82,000 INR. 82,000 into 7.5% into now days. This 7.5% is for 1 year. Pay attention. This 7.5% is per annum. This is per annum, TA. But am I charging him for per annum? No, I am charging him for only 15 days. So into 15 upon 365. 15 upon 365. This is what you need to understand. Calculation of simple interest. So, what are you getting? Try it everyone on the calci. Don't try it orally. Try it on the calci. So, 82,000. I'll also try it. 82,000 because I also don't have the answer. 82,000 into 7.5%. So see this 7.5% means 7.5 divided by 100. Divided by 100. You can mark this percent, you can remove it and mark this 100 over here. Remove this percentage. Okay, remove this percentage over here. Okay, so 7.5 upon 100. Got it? So into 7.5 into 15. Immediately first do all the numerator. 82,000 into 7.5 into 15 divided by, now do this, divided by 365 and 2 zeros. Right? So you are getting it 252 rupees. 252 rupees. 253 you can take it. 252.7 it is. So 253. Okay. Now what about the penal? Penal interest is penal. Penal. PI. So that is equal to again the same amount. 82,000. 82,000 into 9.5. Right? 9.5 upon 100 into 21 days now. 21 upon 365. Try this. 82,000 into 9.5 upon 100 because 9.5 is the penal interest into 21 upon 365. Do it everyone. So 82,000 into what is this 9.5 into 21 divided by 365 and 00. So the answer is 448. Are you getting this? 448 everyone? 448 point something. So leave that point. What is the final answer then? What should the customer pay me as a bank? I am the bank. Customer is the exporter. So what should the customer pay me? So customer should pay you now. Customer pays or exporter pays. Okay? Pays what? Total of all these. 82,000 plus what is this? 253 plus this last one. What are you getting? Some mistake. Okay, 82,000, 82,000 plus 253 plus 448. What are you getting the answer? How much the customer should pay you? 82,701. 82,701. This much the customer will pay you on crystallization. This much the customer will pay you on crystallization. Okay? This is an important numerical for crystallization. This is an important numerical for crystallization. Crystallization is an important topic in exam. Every time it is asked, every exam of BFM, crystallization of exports will be asked to you. In this case study, if it comes, will be for 5 marks. Various elements will be asked over here. See, 1 mark for this, 1 mark for this, 1 for this. So 3 marks over here. Plus some this charges will be given to you. Something they'll adjust it and make it 5 marks. But you have to understand the basic. What is the basic? The rate of interest to be applied is either, see, this part is very important, higher of original bill buying rate or TT selling rate on the crystallization date. Higher of bill buying rate when I purchase the rate, purchase the bill, and whenever I am selling the bill, higher of these two. See, we are in business. Banking is a business. I can do the loss over here, right? Because customer has made an error. Who was to pay on the due date? Was I to pay on the due date? No, customer was to pay. His buyer was to pay. So buyer has not paid. Means whose mistake is it? Buyer has made the mistake. And if the rate, say this, suppose I'll tell you one hypothetical case. If this rate over here was, let's say, 70 rupees. If this rate was 70 rupees, then what rate will the bank apply? Will bank apply 5th August rate, that is 70 rupees? No, it had purchased at 80 rupees. I had purchased something at 80 rupees and now the rate is 70 rupees. So will I sell at 70 rupees? No. What will I do? My purchase price, higher of these two. Whatever is my present rate and whatever was my original rate. After all, this is the same logic of normal business. You will always sell anything for higher than the rate which you had purchased, right? Or at least for the rate which you had purchased. Suppose if you buy a flat tomorrow and afterwards the rate of the flat goes down. So will you sell that flat at a lower rate? No. What do? You keep that flat. Let the original rate come and then no profit, no loss, you can sell it. So it's always higher of either the original bill buying rate or TT selling rate on the crystallization date, whichever is higher. This is the crux of the numerical. Most important part of the numerical is this. So now everyone, before going, kindly note, kindly purchase the CAIIB Increment Mahapack. In Increment Mahapack, you will be getting all the, 15 plus batches per subject. Very important one. 15 plus batches per subject. Physical question bank, physical, all the subjects. Physical formula bank, all the subjects. Plus, you will be getting the electives. Okay, electives are very important over here. So, you will be getting the electives over here. Don't miss those also. Okay, and right now there is a great offer going on. There is a 4x validity, 4x. You buy for one period, you will get it for 4 periods. So 4x validity, it's a huge thing. Plus the discount is also, see, look at this discount part. Never forget the code Y432. Y432. Okay. Look at this, 81% discount plus 1% extra, 82% by downloading the app. Download the app and then purchase. You'll get free 1%. Why to lose on that? So 82% discount plus 15 plus batches plus 4x validity. So it's a huge thing. Join this app. Okay. Bye.